Despite some growing consumer concerns, some signs of strength in CNBC's latest Retail Monitor report. For that, we'll turn to Steve Leisman this morning. Hey, Steve.
Hey, Carl, yeah, consumer spending bounced back in October after a pretty sharp fall in September, with gains in the CNBC NRF Retail Monitor across most sectors, adding up to a strong start for retail in the fourth quarter that could be good for the holiday season. The Retail Monitor, we get actual credit card spending data from Affinity Solutions. It shows retail ex auto and gas up 0.6 compared with a 0.7% decline in September. The year-over-year rate edging down to 5% from 5.4. We take out restaurants as well to get a core retail measure. It's also up 0.6 from a 0.5 decline. The year-over-year rate dropping to 4.9 from 5.7, still in pretty good territory there. NRF economists note recent economic data has been mixed, yet consumer spending remains solid, supported by wage growth outpacing inflation, historically low unemployment, and wealth effects from strong stock market valuations. The monitor has been far more volatile this year, coming up amid declining measures of consumer sentiment, inflation still high for goods, and tariffs that have prompted some front-running by shoppers and then coming off that front-running. 9 of 12 sectors in October, though, were higher, led by digital products, up 2%, and clothing and accessories, up 1.4%. Restaurants and bars, food and beverage, health and personal care, they were all in good territory there, but building and garden supplies down 0.8%. That was one of just 3 negative sectors we have, including gas station sales. The critical questions in retail right now: how goods, inflation, tariffs, and initial signs of a cooling job market will affect holiday spending, along with a spending split between higher and lower income Americans, reported by retailers. But those factors, they didn't hold back overall spending gains in October, guys.
And it's another sort of mixed picture or mixed data point in terms of understanding the consumer. You know, what we heard from, I'm thinking of Jane Fraser, for instance, of Citigroup, who said we've seen no slowdown in card spending. They have a big card business, but 85% is prime. It's like consumers are feeling the pinch, but not necessarily pulling back on spending. Is that right?
That could be. We're working on trying to get this data. I know others are as well, Sarah, to try to get the data to give us a look at the by income level. That would be super helpful here,
yes,
because that's really one of the big splits out there, is whether or not wealthier consumers with their stock market gains are powering these increases that we're seeing on the spending side. It is good to see it across sectors. It's good to see things like clothing and things like online sales and really discretionary items. That's the place that I look to see how healthy the consumer is. Also, look, you're still looking at, as far as we know, a 4.3% unemployment rate. That's in pretty good shape. Wage gains, as measured in the private sector alternative data we look like, seem to be running ahead of inflation, even though inflation is a bit elevated. So all of that bodes well. And I tried to look, Sarah, to see if a good October gives us a good November, December, about 40% of the time. So it's a good start, but really the rubber meets the road when it comes to November and December and some of January, as you know, when it comes to retail. So we'll be watching that very closely. Any initial signs we have of how the holiday season is starting off.
Yeah, we'll be looking for your data then. And hopefully maybe the government will even give us retail sales by then. Thank you, Steve.
Imagine that.
Right. Steve Leisman.